Good afternoon, everyone. Welcome to the fourth session of the Study Abroad webinar series brought to you by Laurian Finance. This week, we bring to you a series of rapid webinars without any long, boring speeches. So today, we're talking about secured versus unsecured loans. Tomorrow is going to be a fresh, brand new webinar on the topic private banks versus NBFCs, followed by F1 visas. To know more, stay tuned on our Instagram. If you've joined our last three webinars, high five. Hundreds of students tuned in, asked their questions, and we've even started getting their loans sorted. So if you are here today, you're definitely in the right place. Today, as I mentioned, we're diving into something super important for all of you planning to study abroad in fall 25, education loans. We're talking about secured versus unsecured loans, what they really mean, which one fits your plan, and how to pick the best option for your university. I'm guessing most of you have your university acceptances in hand. Big congratulations. Now comes the part that often feels like a puzzle, figuring out how to fund your dream without any stress. That's where we come in. We'll break down the loan types, bust some myths, and help you make smart choices so your study abroad plans stay on track. Let's get started. But before that, we also have someone special today, Mr. Viraj Pawar. With over 16 years of experience in finance, he's literally helped hundreds of students get their education loans approved and fly to their dream country. Welcome, Viraj.
Thank you. Thank you for having me, Anisha.
So for those of you who are new here, a quick introduction about us at Laurian Finance. We basically are your study abroad best friend when it comes to loans. We help you compare lenders, pick the right one, get your loan approved without any stress. So we make the boring bits easy. We're also running India's biggest study abroad loan fest at the moment, which brings loans starting at 3.39% interest rates from 17 plus top Indian and global lenders. And the best part, rewards like MacBooks, iPhones, study abroad, travel kits worth 20,000 and assured gifts at every loan dispersal. Now, talking about the loan journey or a student's journey in their study abroad phase, if you are planning to study abroad this fall 25, now is definitely the time to lock in your education loan. So let's cut through the confusion and help you understand the two main types of loans out there that are secured and unsecured loans. Raj, do you want to just guide us over what these loans are?
Yeah. So guys, as the name suggests, what is secured? Secured is something which a bank requires in form of a security. This can be anything, collateral property, a property, an asset like your house or a shop. Okay, and even your non-agricultural lands are taken as a collateral. Even you can pledge your fixed deposits as well as insurance policies against the collateral. So that depends upon the valuation of that particular property. Let's say if you are pledging your property, so uh, the valuation will be considered, and depending on that, the loan will be given to you. The insurance policies and FDs also have a certain valuation and everything. So it depends upon it. It depends upon bank to bank, and wherever you are applying, each one will have a different quote stating that you will be eligible for so and so amount. So that is how the secured loans work. You have to pledge your property for the loans, and yeah, that's how simple it is. And the main advantage about secured loans is that you'll be able to get a lower rate of interest. That's the main advantage. And mostly these loans, these type of loans are given by banks, Indian banks, and be it private or be it public, both types of banks give you these type of loans.
So, Viraj, when you talk about assets like property, are all sorts of property accepted? If even if it's a land, even if it's a house, a commercial property, an agricultural land, all of it is accepted?
House, commercial properties, but for land, only non-agricultural land is accepted, not the agricultural.
Got it. Do you want to also help
So,
us understand about unsecured loans?
Yes. So coming on to the most lucrative loan product, which is unsecured loan, because many students are inclined toward this. So this is the type of loan wherein you get a loan without pledging any property. You don't need any collateral, nothing at all. It just depends upon your profile, your academics, your university or the course which you are going. So all these factors are taken into consideration while giving an unsecured loans. Okay. And let's just say that if any of the student doesn't have a collateral property to pledge, and he has got a good admit from the university, then he will be eligible for an unsecured loan also. So his dreams of flying abroad is not stopped, or there is no obstacle in between for in form of funds if he is looking out for loans. So he is eligible, he will be eligible for unsecured loan. Then we have at Lorien, we have very good options of unsecured loans with us. So yeah, that's how it is. And the only thing about unsecured loans is that these loans might be a bit costlier. The ROI will be a bit on a higher range. Not that it's not a great difference between the collateral, the secured one and the unsecured one, but the ROI is a bit higher because you are not giving any security for these type of loans. So these type of loans are generally provided by private institutions, some NBFCs. We have NBFCs with us, like non-banking financial companies like Credila, Avance, Incred, Oxlo, Tata Capital is there, Poonawalla FinCorp is there. So all these type of NBFCs provide you unsecured loans.
Got it. Let's quickly also understand how secured and unsecured loans work. What is the major difference between them?
Yeah, that's the difference between in front of you guys. Secured loans and unsecured both provide you 100% cost of education. But for some secured loans, I will say that there is some amount of margin money which is required. So it depends upon case to case and which bank you are applying for. So let's just say the bank will say that, okay, we'll be able to fund only 90% of the cost of education. So the rest 10% will be funded by you. So that is how some of the banks operate. And those are very traditional loans. So they haven't changed their product or evolved their product over the time. But unsecured loans, they constantly evolve their products. That's the USP of unsecured loans. And they always tend to ensure that the students go to their destination study uh, worry free and there is no problem, there's no hassle for them. So they tend to give you 100% cost of education. So that's the how much loan amount you're getting. Okay. The interest rates, obviously, as I mentioned, for the secured ones, the interest rates will start from 8.25%. For the unsecured ones, we have interest rates starting from 9.25%. But yes, we have for unsecured ones, if you have, let's say, a co-signer from US, then we'll be able to get for the lower rate of interest starting from 3.5 onwards. So that is how lucrative it will be if you are looking out for unsecured loans. Um, yeah. And next, coming on to the next, that is the approval time. That is the TAT, which we say, the turnaround time. So for the secured ones, obviously, the banks take a lot of time. They take more than 20 days. And if you are looking out for secured loan options, if you have a security in hand, your parents are comfortable with it, no worries. Lorien Finance can help you with that, but you should always have liberty of time in your hand. And that is the thing. The banks take a lot of time to do the legal and technical evaluation of your case, and then only they will be able to proceed with your loan application. But coming to the part wherein the unsecured loan is, we have to go for unsecured loans, then we can get you a loan within 5 to 7 days. That's the ideal time period. So if you're let's say if you don't have time for your I-20s or for visa, then yes, this is the right time. We can go ahead with unsecured loans. We can get you a quick approval and get a loan disbursed also on time. Next, coming on to the eligibility. Okay, so over here for secured loans, let's say the co-applicant is not having a stable income or is having a decent income and his CIBIL is also okay, then also he is eligible for a secured loan because he is pledging his property for that particular loan. Okay. So over here, even if the co-borrower's profile is income and everything is not that strong, then he is eligible for that particular loan. But for unsecured loans, the co-borrower's profile should be strong enough. His CIBIL and everything must be more than 750 in order to get eligible for the unsecured loans. There are cases wherein if the admit or the university is good, then there are some exceptional cases also which the lenders will take and they will take a deviation for you guys and they might approve you the loan. So that is how flexible the unsecured loans are sometimes. But secured loans are a bit rigid, so they need to have everything ticked off. So yeah, that's how it works. Coming on to the repayment terms. So repayment in terms of repayment, the secured loans have a longer duration. It's more or less there is no difference between the secured one version and the unsecured version. Hardly 1 or 2 years of difference is there. And moratorium is available for secure loans. Yes, you don't have to pay. There are options. You can either choose to go for full moratorium or you can go for simple interest during your study period. For unsecured loans, yes, you have the option of partial interest during your study period, wherein you don't have to burden your co-borrower with so much of payment for interest payment. So there is hardly around 5,000 or 6,000 they will charge for your partial interest during your study. What are the common issues? Yes, common issues as mentioned over here. There are property doc issues because you have to submit your collateral for the secured loans and the delays in getting the sanction. The process itself is a time-taking process, as mentioned earlier. 3 to 6 weeks is a general time which we also take, and if any of the students want to start with collateral, yes, they should have that much liberty of time in their hand. For the unsecured ones, yes, there is a fear of rejections due to the civil issues of a co-applicant or the co-applicant profile or the university which is going to something around that. So whatever eligibility is required for unsecured, if there is some problem with those eligibility criterias, then yes, those common issues occur when you are applying with unsecured. But I will instead say that if you are looking for any of these type of loans, I will always say that always check your eligibility well in advance. Lorraine Finance helps you with checking your eligibility and ensure that you have the peace of mind while going ahead with the rest of your process of I-20 or visa and everything. Okay, that's it.
Thank you, Viraj. Thank you. I just have a couple of questions with the differences that you've mentioned. So, as we see here, that the loan amounts for both the types of loans is said as 100% covered. How do you think, if you could just explain to us, how does that happen? Because obviously, for a secured loan, there's some collateral that we pledge, but there's nothing that is being offered as, um, as a safety to the lenders. How do they still do that 100% cause?
Yeah. So yeah, good question, Anisha. So there are various touch points which every of these lenders look forward for. So these uh, I have talked with many lenders, and some of these lenders have more than 300 touch points wherein they see that okay, whether the student is particularly eligible for a loan or not. The primary ones I will tell you. So one is the university which you are going, okay, the course which you are going, the GRE score, if you are taking a GRE exam or GMAT exam, the GRE and GMAT score, your TOEFL IELTS score will be taken into consideration. Your past academics are taken into consideration over here. And apart from that, obviously, these are the profile which a student has, everything related to student. And one thing which is related to the co-borrower is his income history and the CIBIL score. So all that credit history will be taken into consideration. So all combined is taken into consideration while giving you an unsecured loan. So most of these unsecured loan options, they have a university listing wherein these lenders, what they do is that if the university is listed into their funding options, then yes, they will be going ahead with that particular loan. So that's how they make it possible.
Great. Thank you. So let's do something fun now, like a rapid fire round. I'll throw out some questions, some quick questions, and you can type your answers in the chat board. Whatever you think, the first thought that you get in your mind. The questions are for you too, Viraj. So you'll only have a couple of seconds to answer me. I believe everyone's ready. And you can all see the first question on the screen, which is, what if you do not have a collateral and you're getting a very high interest rate loan? Would you still take it? Till the time everyone drops their answer in the chat box, Viraj, why don't you answer for us?
Um, yes, I will. I will do one thing. I will be. By. I will think about it because I will. I will. If the no collateral with high rate of interest, I will still take it. But I will also do one thing. I will also play around. I will explore some other options which are there in the market, and I will see that if those options are giving me a better deal out of it. So uh, and at Lorien, we are kind of pampering our students with all these options. So I will always take a benefit. If I am a student, yeah, I will always take a benefit of this, and I will check on all the options which are available and make sure that I get the best deal out of it. So yes.
Okay. The next bit is loan in 3 days but a higher EMI. Would you take it?
Yes, I will take it if, let's say, I'm going for a visa interview and I need a loan very urgently. Yes, I will take it. Guys, you should also opt for it because even if it is higher EMI, the higher ROI, you should go ahead, take it because you need to show funds for your visa. So don't mess up with your visa. I will always say that. Once you are done with your visa interviews and all, we have options. You can always check for other options also. If once your visa and everything is approved, you can choose for other options and you can go via them. So yeah, in case of urgency, we should always go for a yes.
I'm getting a mixed response with yeses and nos. The next bit, would you pledge your family's house to get a better loan deal?
Yes. For instance, I will always check both the type of loans. I will check with collateral and I will also check with a non-collateral loan option. If any of them are able to serve me a better deal, then yes, I will definitely go ahead with the one which is offering me a best deal.
Great. And I believe it's not even a Bollywood drama where you feel the banks are going to just take your house away. The next one, loan with lots of paperwork or loans with a bit more cost? What would you pick?
Hmm, very tricky question. So yeah, I will always go with I'll say that I will go with bit more cost over the paperwork because the paperwork becomes hassle. Uh, it becomes a very tedious and cumbersome job for any of the students to collect all those papers. So it's better. It's always better than let's say for paperwork. It directly means that I'm looking out for a collateral loan, and with bit more cost means I'm looking for an unsecured loan. So I will prefer, I don't want to go with the collateral, but I don't want to burden my parents also with the collateral property. So I will go with more cost then. Okay.
Got it. And the last one, unsecured loans mean freedom or fear to you?
Okay. Uh, my version of this is very different. I would say that guys, don't treat loan as a fear, treat loan as a leverage. Okay. Leverage in the sense that you are taking this loan for your education. It's kind of an asset for you. It will be acting like an asset for you, and this asset you will be utilizing it for your education, and then you'll be also getting a good job and everything, and you'll be able to repay that very easily. So this is always a freedom for me, yes, for sure, and the freedom from the what I want to do and what I dream for. So yeah, that's it.
Great. Now that we have the basics, we've learned everything, let's quickly just check what it takes to qualify for a secured or an unsecured loan.
Yeah. So guys, there is no much of a difference. It's just that the collateral has the additional things which are required. Okay. Most of these points are very common. Like Indian for secure loan, we require an Indian citizen for both co-applicant as well as applicant. Confirm admission from the university is required. Yes, that is a mandatory criteria for any secure loan. Collateral property, yes, property, FDs, non-agricultural lands, and your shop property will be taken into consideration. Co-applicant with a stable income and clean credit history is usually needed. Okay. However, there are some other conditions also regarding co-applicant. So, when you get a loan, when you start your loan, you will understand that. Decent academic record, yes, decent academic record is a must when you are obviously looking out for a chance of studying abroad, then you should be having a decent academic record to back it up with. For unsecured loans, yes, it's the same criteria, Indian citizenship for both applicant as well as co-applicant. Confirm admissions for some of the non-US countries. Okay. For US-based universities, you don't require a confirm admit. We can start your loan even without admits. For unsecured, yes, this is the main point. When in strong academic profiles, as I have mentioned earlier, there are quite a few factors which are taken into consideration while sanctioning your unsecured loan. So for that, your GRE, GMAT, and IELTS, all these scores should be good enough to get you a better deal for unsecured. Co-applicant with a good credit score, that is a must, and with a stable income, obviously, and target university and course in lenders approved list. So these is they have a approved list. Each lender has an approved list, and if your university belongs to them, then yes, the chances of getting an unsecured loan is higher.
Great. Now let's buzz some common myths about education loans that not Google, no chat GPT is going to clear for you. The first one, as you see on the screen, secured loans are always better because of lower interest rates. Raj, do you have a say on this?
So, guys, now unsecured have equally matched up with secured loans. So, if you are getting a better deal via unsecured loan, you should always explore options with unsecured loan also. So, secured loans, yeah, they do give you lower rate of interest, but unsecured loans are equally matching up with different kind of benefits what they are providing. One with the rate of interest, the 100% funding and everything, the tax benefit which they are providing. So there are various other benefits as well. So yeah, this is a myth that secured loans are always better. So yeah,
Yeah, and we can't even miss on the fact on how quick they are, as you mentioned, that we can get them sanctioned in
yeah,
5 to 10 days.
yes, 5 to 7 days, yes, because secured loans take time.
Yes. The next one's unsecured loans are only for people with amazing credit scores.
So it's not like that, guys. Unsecured loans. See over here, credit score for credit score. If even if your co-applicant's credit score is not good enough, then we also have options wherein you can try out unsecured loans via some of the lenders which are available with us who don't take co-applicant on the loan structure. So even if there is no score or anything, yes, you can apply with unsecured loans. So that's a myth wherein it is mentioned that unsecured loans are only for amazing credit scores. You can get if you have a decent score, we can get your loan sanctioned via unsecured loan.
And how also you were just mentioning, that these lenders also consider the future potential and the academic background of the student.
Yeah,
So
yeah,
that also counts, right? Great.
yes.
The next bit is if I take a secured loan, the bank will definitely take my property.
So this is something which I will always say that this fear in mind, just destroy that fear in your mind. Always consider loan as a leverage, okay, as a freedom what you are going ahead with, and see, banks don't intentionally take your property for the purpose of that they will auction your property or take away your property. The main only intention is that to back it up with the amount which you are taking, that's the security is the only purpose what we are taking it by. So their sole purpose is not the auctioning of the house which you are pledging. So that's a myth which many of us have.
Great. The next one is, if I apply for a loan, my credit score will drop to zero.
Guys, your credit score doesn't easily drops to zero. Okay, it takes time to if you are messing it up, then it might go further down. It won't drop to zero. It is between 300 to 900. Your credit score is between 300 to 900. So for sure, it won't drop to zero. Okay. Just that if you are checking your eligibility by different lenders, then it won't hamper much. It's just a soft pull which many of the lenders check to ensure that the eligibility of the student is met. So your credit score won't be impacted when you apply for loans. Don't worry about that.
Okay, coming to the last one now. Unsecured loans are just fast money, no consequences.
Okay, this is something which I don't know who is speaking about this. Okay, for guys, for unsecured loans, we always have to, for most of these loans, for more than 90% of these loans, we have to get someone on the loan structure who is our blood relative. Let's say he is called as a co-applicant. Okay, we need to have a co-applicant or a co-signer on the loan structure. So if you are going abroad, obviously the co-applicant or co-signer needs to stay in India. He is the one who should be an Indian citizen and he will be staying in India. So there is no such thing as no consequences, yet there will be consequences.
And also how it impacts your credit score for future loans,
Yeah,
right? Yeah,
yes, definitely.
great. So, all right, now over to our audience. If you have any questions, please drop them in the chat box, and Viraj would be very happy to answer them, even if it's about a loan, your admit, or if you want tips on how to convince your parents, we're here for all of it. So, as we wait for the questions, Viraj, could you just guide me on how you were talking about the difference in the interest rates offered for secured and unsecured loans? And what I understand is that secured loans is obviously a safe space because we're offering something as a collateral, but there's nothing of that sort in unsecured loans. But the interest rates, how we saw, is 8.25 and 9.25, as you mentioned. How is there such a small difference in the same?
So, yeah, each one, see, most of these interest rates are, if we are looking for Indian lenders, most of these interest rates are linked to repo rates, what are being governed by our Indian government. So, they can't go off wire. So, the interest rates they have to keep in tabs. And for
Yeah,
banks, especially, they have to ensure that these interest rates, because RBI is watching these banks and how they are operating, so they can't go haywire with the interest rates and discharge a bomb for the students. So
yeah,
these interest rates are more or less linked to these repo rates, and that is how bank functions. And even if you are pledging your collateral, yes, the rate of interest is according to the banking norms which are there, and you'll be getting the lower rate of interest. And as you see, with non-collateral option also, these non-collateral options are generally offered by NBFCs. The rate of interest is not quite of a difference because that's how they are borrowing the money for that particular rate of interest. So their borrowing cost is lower, so they are able to pass on the benefits to the student as well. So yeah, that's not of a huge difference. Firstly, few years back, as you rightly mentioned, Anisha, few years back there was a huge gap between this rate of interest. So for collateral it was below 10%, for non-collateral it was beyond 14% and so. So right now that the gap has reduced a lot. So yeah, that's a win-win for all of our students.
exactly. There's another question that has come up that's asking, is there a different approach for US compared to other countries in secured or unsecured loans?
Yeah, kind of a thing that most of these lenders they consider US as a good country and better opportunities over there. So, in terms of opportunities and the universities which are there, uh, US is a favorable option for all these lenders. As I mentioned earlier, that even if you don't have a admit, you can get your loan sanctioned via most of these lenders. So that's how favorable the conditions for US are. So if you're looking for options in for both, if you're going to US and you're looking for secured and unsecured options, then yes, it will be very easy for you to get a loan compared to the all other countries which are there, non-US countries. So even the lenders have a different product. They mentioned that US is different, non-US is different, non-US all the other countries.
Okay, the next thing is why might a lender deny an unsecured loan even if the applicant has a good credit score?
So, yeah, good question. So even if the applicant has a good credit score, so the only way that the lender can deny his loan because the student might be going to a different country, let's say he's going to a non-US country, and or I will just mention all the reasons. The his course is not eligible. Let's say if a student is going for a particular social science course or an arts course, which is for whom the job prospect market is very low. So the lenders will might decline these loans very easily. So if and one more reason is that if even if the parents or co-borrowers civil score is good, and if the students acads the academics are low, then yes, that's another reason wherein your loan might be declined.
Great. There's also another thing that's asking what should I prioritize when choosing between a secured and unsecured loan? Should I prioritize interest rate, repayment period, or flexibility?
Yeah, good question that is actually. So, see, firstly, what many of our students see is that they see the interest rates. Obviously, you should look for interest rate because even if you're taking, let's say, if you're taking a 50 lakh worth of loan and even 1% reduction in the interest rate, that comes to around 3 to 4 lakhs of difference when you are repaying your loan. So you should always look for interest rate for sure. Okay. Second most important thing you should look after, or you can place it to the top most important thing is that the 100% cost of education, whether that particular lender is giving you the complete cost of education. And complete cost of education means your tuition fees as well as your living expenses. If that lender is meeting that requirement, yes, even if the rate of interest is bit higher, slightly higher, I will say go ahead with that. So these are some of the things which I will always say that these are the most important things we should go ahead with. Let's say if you are a privileged student and you're going to US, you have a time in your hand, then obviously you can explore options via Lorraine Finance, wherein we will be able to help you out with different kinds of loans, and then we'll be able to help you out which loan will suit your actual requirement. Let's say if your parents are into higher income bracket, then obviously going with a loan which is offering you tax benefit under Section 80 will be a beneficial for you. So that benefit will be very good for your while you repay your loan. So that is something which you can look out for. And plus, if you're a student who wants a longer repayment, so there are some loans which are offering longer repayment of 15 years or 20 years. So you can look out for a longer repayment also. So it all boils down to your profile, what you're looking out for. If you're looking out for a longer repayment, if you're looking out for a tax benefit, if you're looking out for lower rate of interest, if you're looking out for a complete cost of education. So yeah, so all that is what matters according to your profile, I will say.
Great. There's another one, Viraj, that's asking if my parent is retired and the property we want to pledge is jointly owned with a relative, will that affect my chances of getting a secured loan?
Yes, then the relative also would be needing to be coming on the loan structure. He will need to come on a loan structure as well because he is the part owner
Owner.
of the property and he will. you will need to give some documents. So as I said, it's a whole game of a document wherein you are going for a secured loan, then a lot of documents are required. So uh, this will make your process a bit more lengthy if you are also getting a relative on it and going ahead with your secured loan. So I will always see that even if your parents are retired, then obviously apart from that, uh, if they are pensioners, then great. If they are not pensioners, then obviously you will be requiring one more cosigner as an income cosigner on your loan structure who will be coming and meeting the needs of income criteria for the loan. So there is an income criteria for any loan which we are getting. So if that is met, yes, we will be able to get you a secure loan.
Okay. The next one says, does it matter if I'm from a tier one, two, or three city when applying for an education loan? If yes, does it affect the loan amount or terms and conditions for secured loans?
Oh, that's the main thing. This is a good question. I'll say that even if whatever tier you're coming on from, one, two, or three, doesn't matter if you're getting into good university, if you're going to good country for to study abroad. So if you have good ACADS, so it doesn't matter if you're from what background you're coming and all that. So you will get you, Lawrence Finance will help you get you a loan for your studies.
Great. Okay, I have a few more which say if I'm going to a country like Germany where tuition is low but living expenses are high, will that impact the loan amount I can get, especially for unsecured loans?
So, for Germany especially, yes, we do unsecured loans. We will be able to get you. I know that the tuition fees are very less for Germany, but as I mentioned, for unsecured loans, we are also giving out the complete cost of education, which includes your living expenses. Even if the living expenses are high, we'll be able to meet you with that. So, no worries if you are looking out for unsecured loan option.
Great. The next one says for a collateral loan of around 35 lakhs, how much should be the co-applicant's salary?
So for collateral loans, see, for this is there is no such thumb rule of salary, but I will say that for collateral, if you're looking out for collateral in particular, then obviously you should be willing to pledge your collateral, which is your house property or shop property or land. So over here, your collateral valuation should be more than 35 lakhs for sure. So it should be more around 40 to 50 lakhs if you are looking out for, firstly, if you're looking out for collateral loans. And the salary, yes, the salary can be, the cosigner is there on the loan structure. Yes, he'll be able to get you a loan even if his salary is in the range of uh, 3.5 to 4 lakhs per annum. So that's not a concern.
There's this interesting question that I have that's asking if I plan to work part time abroad, does showing a potential income stream during studies improve my chances for an unsecured loan?
Okay, okay. This is a very good question, and I think students are very much worried about their job prospects or something around that. And okay, so guys, please understand one thing. If you're getting a study loan, then the main intention of anyone who is giving you that loan is to make you study and not to make you work. So if you are getting a study loan, that's the reason why you're getting a moratorium period of 2.5 years or 3 years for your loans. So if you're taking a study loan, yes, please study first instead of working part-time. I have many students who were working part-time. I always tell them, I always communicate with them on LinkedIn, and they always tell me I'm getting a job and all that. So I always see that please prioritize your studies first instead of taking up that job. Hey, yes, you should take up jobs. I will never say that don't take up jobs. You have on-campus jobs. You are allowed to work 20 hours per week. You can take up those jobs. But first year, yes, if you're going in US, and for the first year, you should study properly instead of taking up some odd jobs and fulfilling your other costs like living costs and all. So yeah.
So the comment says my father filed his ITR of 1,30,000 per year. Am I eligible for loan? And my collateral property value is 52 lakhs at present.
Okay. Over here, I will say that we will need to understand your profile a bit more clear. And please get in touch. Our Lorraine Finance loan counselors will get in touch with you. Don't worry about that. And we will examine your profile, we'll analyze your profile. And if you are looking particularly in collateral, then yes, we'll be able to help you out with that. We will be able to give you we'll ask you for other options which are required to be met by you. So please cooperate with our loan counselor so that they'll be able to help you out with your loan requirement.
Just the last one now. If the property being pledged has an existing home loan on it, can it still be used as collateral for a secured loan?
Yes, that's a good question. Many of the students have well, if they are going for a collateral loans, yes, their loans, their property has the ongoing loan going on. So let's say it depends, all depends upon which bank you are doing it from. Let's say if you're doing from popular banks like ICICI or Axis Bank, yes, we will be able to help you out with a loan, education loan, but it all depends upon how much of the property is freed. I mean, how much of the loan is being repaid. If you are repaid more than 70% or 80% of the loan, yes, that property can be merged and you will get a education loan depending upon how much property valuation is remaining and uh, your loan will be eligible as per that. So yes, if you have an ongoing housing loan going on your house, you can pledge it as a collateral.
All right. Thank you, Viraj. Thank you for joining us and sharing all these insightful tips. Thank you, everyone, for joining us. But before you go, don't forget about the Study Abroad Loan Fest at Lorraine Finance. If you're planning to apply, now's your moment. We'll help you with the comparison, paperwork, the best deals, all at no cost. Also, this webinar and all our previous webinars, you can find all of them on our YouTube channel if you want to share it with your friends, rewatch anything for any further doubts. And for our upcoming webinars for tomorrow and day after, stay tuned to our Instagram. Thank you, everybody.